Hi, I'm Melissa Tierney, and this is your July 2026 market update for Santa Barbara, Montecito, Goleta, and Carpinteria. Here's the headline. Sales volume is up, but prices came down. And that combination is telling three completely different stories depending on whether you're buying, selling, or holding rental property. And so I'm going to walk you through all three. So stick with me for the piece that's yours. Let's start with the numbers that everybody's asking about. South County closed 131 sales in July, and that's up 9% from July last year. Year to date, we're at about 857 sales, so up 8%. Activity is genuinely picking up. More deals are getting done than this time last year. But average price told a different story. We're down 15% year over year to just under 2.7 million, with the median down slightly to 1.725 million. And if you zoom out further, you'll see it clearly on our 36-year price chart. The county average sits at $2.9 million right now, which is down from 6% from last year's peak. And what is driving that? Two things. First mix is fewer ultra high-end Montecito Hope Ranch sales this July pulled the average down, even though a broader market held steady. The second is rates. We're sitting at approximately 6.76% right now. That's actually ticked down slightly. And for context, rates have ranged from either 3% in 2021 to over 16% back in 1981. Today's number is closer to that historical middle than people think. And inventory remains tight, just 3.06 months of supply. Anything under 6 months typically favors sellers. So we are nowhere near a buyer's flood. For buyers, if you've been sitting on the sidelines waiting for a crash or for rates to go down a couple of points, this report is your signal to stop waiting and start running numbers. And here's why. Single family median is down 9% year over year to 2.2 million. And the days on the market have stretched to 40 days for single family homes. And that's meaningfully longer than the seller's market pace that you remember from a couple years back. Condos are a different strategy right now. The median price is actually up 16% to approximately 1.035 million, and they are moving fast, just averaging about 25 days on the market. So if a condo is part of your plan, you'll want to move decisively when the right one hits. And so one more thing before you write off this rate environment, a fraction of a point moves your payment more than most price negotiations do. So, for example, on a $1 million purchase, buying down your rate by 1 point will cost about $8,000 and saves roughly $132 per month. And increasingly, sellers are willing to credit that at closing instead of cutting their price because it protects their comps. So if you want the full breakdown on permanent versus temporary buy downs, I've got a one sheet for that, and the link is in the description. If you're currently renting and your household income has grown since you signed your last lease, the math may have quietly shifted in your favor, and I would ask yourself, what would that rent be building instead if it were going towards a mortgage? If you're a seller, here's the headline. Pricing correctly matters more this month than it has in a while. Cash buyers made up 35% of July's sales, which is a little bit down 40% year to date, which tells me that financed buyers are back in the game and they are rate sensitive. And that's good news for the buyer pool, but it means overpricing gets punished with longer days on market instead of just a slower bidding war. Look at Goleta as the standout for this month. Median price is up 32% year over year to 1.37 million with 44 sales. And that's one of the healthiest micro markets in the county right now. Santa Barbara proper held steady with 60 sales and a median of 1.818 million, which is actually up 22%. So if you're deciding whether now is the right window, here's my honest read. Buyer activity is up. But buyers are doing their homework and comparing days on the market, watching for price reductions, and using that 40-day average as leverage. So a property that's priced to current data, not last year's headlines, is still moving quickly. And one that isn't will sit. And sitting is what erodes your negotiating position. So if your situation involves a trust, an estate, or you're managing property on behalf of family, that's the work I do every day. And I'm always glad to have that conversation privately. No pressure, just clarity. For investors, for my investors and rental property owners, this segment is for you. The story this month is really about the cost of capital, not just the cost of the asset. We're about 6.76% today. If you're holding a property you bought where rates were near 3%, refinancing math, it doesn't pencil the way it used to. But that doesn't mean your options are limited. It means the conversation has shifted from should I sell to something a little bit more strategic. And I think about every property in three buckets. There's one, the exit. Is it time to sell and redeploy capital entirely? Two, the trade. Is there a more efficient asset that solves the problems this one has? And whether that's management burden, deferred maintenance, or stale rental income. And then finally, there's the offset. Those are the ways to reduce your tax exposure on the transaction itself. And so more of your equity moves forward with you instead of going to Uncle Sam. So total resale transaction volume this year has been remarkably consistent, 130 plus closings per month since March, which tells me that there's real liquidity in this market for the right priced asset. And of course, the right asset in general. If you've got a property that's been sitting stale or you inherited something that you're not sure what to do with, this is exactly the conversation I have with clients every week. So I go much deeper on this with real case studies in my investor seminar. And if you want the full framework, the details are in the description, and I'd love to see you there. So to sum it up, activity is up, prices have softened at the top, inventory is still tight, and rates are holding in the high sixes. Whichever seat you're in, buyer, seller, or investor, the data supports moving thoughtfully and not waiting indefinitely. So if you want to run your specific numbers, my calendar link is below. I'm Melissa Tierney. See you next month.